Welcome to Inside Out with Chris, a podcast where there are no limits or surface level conversations. I'm your host, Chris Burns, a personal development coach on a mission to empower women to move the needle in all areas of their lives. Each week we dive into deep, thought-provoking conversations with inspiring guests. We're talking deep truths, raw experiences, and dropping game-changing takeaways to help you break free of the BS holding you back. Let's transform you from the inside out. Today, I'm speaking with Natalie Spence, the founder of Coast Finance Group. With a deep commitment to professionalism and personalised financial solutions, Natalie has been instrumental in guiding countless individuals through their financial journeys. Her expertise spans personal lending, business lending, and more, all tailored to meet unique client needs. Join us today as we delve into her insights on building strong financial foundations and the importance of trust in client relationships. I really wanted to have Nat on the podcast today because, let's be real, money impacts every aspect of our lives, whether it's buying a home, building wealth, or just feeling financially secure. It all starts with the right amount of knowledge and guidance. Natalie isn't just about numbers, she is about helping people create financial freedom with confidence. And I know so many of you, whether you're in business or you're a parent or just trying to get ahead, you're going to get so much value from today. So let's dive in. Welcome, Nat, to the podcast.
Thanks for having me, Chris.
Is it okay that I call you Nat? Is it Natalie's quite formal for me?
Yeah,
I do call
Nat's
you Nat.
good. I like Nat. It's good.
Beautiful. So I would love to know if you can just share a little bit on you and your background and your story and where everything sort of started for you in finance.
Yeah, sure. So I did a business degree at the University of Newcastle. Didn't really know what I wanted to do, so I thought I would go and get a job at the bank. And at that time it was the Commonwealth Bank, and I started out as a teller and still not really knowing what I wanted to do. I got asked if I wanted to join business banking. So I worked my way up through business banking, spent a little bit of time in Sydney, subsequently spent 11 years at CBA as it would turn out.
Wow.
And then post that I went to the NAB. NAB came and saw me and said, we've got this really good opportunity in Newcastle. Would you like to be a senior banker in our team in Newcastle, in the commercial team?
So they poached you.
Yeah, they did, which was
cool.
nice.
And
look, for me it was I wasn't unhappy at the Commonwealth Bank. I had a great career there as well and was doing really well. And I guess probably that's one of the reasons why NAB saw me in the market. But then I also reached a point where I thought, you know what, if I don't go, I'll never know. Yeah. So I decided that I would go to the NAB. So 14 years later, I spent 14 years at the NAB. So 14 years later, I had a baby and I had just finished maternity leave, and I was about to go back to work, and it was actually my second child. So I had given birth to my second child, and I had been offered a job back at, obviously after my maternity leave, to go back to the NAB in Newcastle. And a colleague of mine said to me, I've got this idea. He said, we could be brokers. And I was like, what? I've just had a baby. I've come back from maternity leave. I'm due to start next week. And he said, I think this could be really good. And so Coast Finance was born a couple of weeks later, and we opened our doors at the end of 2020, just as COVID hit. Yes. So that was challenging for us.
How did you pivot in that time?
Yeah, look, I think for us, it gave us an opportunity to set the foundations of our business. And I think it gave us the opportunity to really work on what we wanted to be, what we wanted to do, what we wanted Coast Finance to look like. And I think with COVID as well, a lot of people had a lot of time up their sleeves to do some work on their own finances and do a little bit of housekeeping. So obviously with technology, Zoom meetings, we actually had quite a successful first year. It was actually really quite busy because I think people did have time on their side to do a bit of homework and to come and talk to us. So after year one, Coast Finance was going exceptionally well, probably busier than what we ever thought. And I had 2 small children at the time. So it was very challenging, but we were doing what we loved. And that was, helping our clients, creating relationships and providing solutions. And that's what we really love at Coast Finance. So, yeah.
What do you feel like really sets you guys apart from traditional options?
Yeah, look, I think relationships, absolutely unequivocally is relationships. And our ability to create those relationships and care about our clients and wanting to help our clients succeed and grow, and whether it be their business or whether it be their personal finances. I think at Coast Finance we want to understand our clients. Yes. We want to understand the information that the clients provide us and what they come to us with. We want to understand what their requirements and objectives are moving forward. So everyone's requirements and objectives are going to be different. Whether it's a first home, whether it's an investment property, whether it's a commercial premises, whether it's something more complex like trade finance, understanding what the client's requirements and objectives are and what they need from that transaction and what they want from that transaction is, the way that we, I think, add value to our clients and the fact that we own our own business and we're business owners as well and we're not going anywhere, we're here for the long haul. I think fundamentally one of the reasons why we decided to be brokers and have our own business was relationships at banks change. Banks are absolutely fabulous. We have great relationships with banks and there's some great bankers at the banks, but they are a big yes. Business and they do have staff turnover issues. So getting to know your banker these days is a lot more challenging and the bankers change and the relationships change at the bank. So having us to come to and knowing that we're always there and we own our business as well, we found was one of the compelling things that caused us to set up Coast Finance. So
yeah, I love that you've just touched on relationships there and how important that is to your company because you're one of the sponsors for International Women's Day, which is phenomenal, and I'm so excited to have you a part of that day. I'm so excited that you're coming to the event as well. It's just amazing, the support I've received from you guys. And one of the things I really found quite important from the beginning with the people that come on board as sponsors, I really deeply wanted them to be people that I knew and I valued and I felt comfortable with, and I knew what they stood for in their values and how they aligned with me and my business as well. So I can really speak to the relationship that I have with you, having used you personally. You allowed me to feel seen and heard in a safe space as well, which I think is really paramount when you're dealing with money and you're dealing with finance and you're dealing with new opportunities, whether it's buying a home or getting a car or whatever the thing is that you're trying to do with your broker. And I think it's really magic or special that you can have a relationship like I have with you, where I can be like, hey Nat, I've got a dumb question for you, and you're like, oh, that's not stupid, I can answer that, and you'll answer it, right? There are some people that in the past when I've dealt with borrowing money with a bank or the finance company with, say, a car when I was younger and I bought a new car, who can make you as a woman, for myself personally, feel quite small and feel quite silly and feel, because we're not taught in schools. No one told us about the processes that you've got to understand. And for those of us like myself that aren't great with maths and aren't great with money and figures and stuff like that, it's so great that there's women like you that really just hold their values and alignment in the business that you run as well.
Yeah, and look, I think finance isn't fun and finance isn't sexy, that's for sure. We all know that. So having someone that you can trust and that you can relate to and knows that, and knowing that they want to take the time to understand you, understand the 3 kids, understand that that you need to do travelling or you've got private school education or what the conflicting obligations are, and being able to help you work through that and delve through that and making you understand how you can make your money work for you, and whether that's investing in the future or whether that's just securing a home, for a first home, or whether it's, balancing between property investment and shares. Or look, obviously we're on the finance side, but understanding what our clients' requirements are and what their objectives are and where they want to be helps us articulate their information and provide solutions.
Yeah, I love that. So many people feel overwhelmed or stuck when it does come to money, whether it's buying the home or refinancing or just getting ahead financially. What do you think the biggest mindset shift is that you believe people might need to make around money?
Look, I think it's just understanding what your current position is, what you've got to work with, and breaking that down to where you want to be and setting goals for yourself. And look, setting goals is absolutely paramount, whether it's I need to save enough money for a deposit to have some equity in a property, or I need to, have enough equity in my owner occupied property so that I can subsequently go and get an investment property. I think breaking your goals down and understanding where you are, rather than having this massive big picture that you just can't seem to get over or get around. It's being able to sit down with somebody and to make it easier for you. Yeah. Sit down and go, well, this is how much you've got. And I think also breaking it down to what's real for you in terms of what do you spend your money on, how much are your loan repayments going to cost, how does the bank look at those loan repayments? A lot of people think that they can afford loan repayments as well, but when you sit down and articulate with them how the bank views loan repayments, there's quite often a aha moment, because banks particularly in Australia are very heavily regulated, and they do use what we call buffer rates for servicing. So basically what that means is that if you're paying a rate of 6.1%, a bank will assess you at 9.1%. Yeah, so they'll assess you at 3% above generally. Some second tier lenders, and I'll talk about first top tier and second tier lenders briefly today as well, but some second tier lenders will only use a 1 or 2% buffer rate, which means you get a little bit more borrowing capacity, but you still need to understand how much your repayments are going to cost and how does that correlate to your repayments, your car loan repayment, the groceries, the cost of groceries. Do you want to have a holiday? What's your entertainment and lifestyle? So actually breaking that down for our clients really helps them understand where their money's going to, and that's super important. You don't want to be in a home loan and feel like you're a slave to a home loan.
100%,
so it's not comfortable for anyone. So particularly when you've got a family and you've got commitments and you just really want to be comfortable and understand where your money's going to and how it's working for you.
Yes, I love that so much. What do you feel like are some common financial mistakes you see people making, and how do you think they should be avoiding them?
Look, I think probably overspending is probably one of them, that's for sure. Living beyond your means, it's really easy to do, and we all know that the cost of living is escalating. And just even fresh produce. I'm not even talking extravagance. I'm talking fresh produce. Quality fruit and vegetables, meat. The cost of living is certainly expensive, let's be honest. So I think probably not understanding where your money is going to, not budgeting. Look, budgets are boring. I know, I get it, they are. But having one and just loosely in your mind knowing where your money is going to and how much you need to set aside to meet your financial goals. I think that really is the most common mistake, and it's an imperial one where it's understanding where your money's going to, and how you got to get what you've got to do to achieve your goals. Yeah. So, and sitting down with someone. Look, I'm in lending, financial advisors as well. Absolutely, get yourself a financial advisor. Understand what your goals are, and put the advisors together so that you have a plan.
Yeah. I think because obviously I work in the coaching space, and I deal with a lot of people in the wellness industry and things like that. And one of our the 2025 start to the year process for a lot of girls and a lot of women is doing your vision board and putting all these pretty pictures up. Like, can you not add into that 2025 vision board the budget and money?
Yeah, put the budget in there.
No doubt the girlies have their bloody the car that they want or the bags that they want. Like, all of these things go on this vision board, right? But are you actually being intentional in manifesting the money that you want if you're not budgeting and you're not actually looking at what's within your means? Like, it's not realistic.
And look, I think it sounds like a kind of overused term being financial freedom, but that is really what the long-term goal is. We want to make sure that we are financially secure as we age and as we get older, because we want to have the financial means to have a life and have a lifestyle. And it doesn't have to be extravagant. I'm not talking private jets and, expensive handbags, but just being able to, when you want to retire and when you do want to finish work, having enough money to survive and to have a beyond survival, I guess, is more having the money to have a comfortable lifestyle and a comfortable retirement and not have to worry if you want to go for a walk on the beach, whether you can buy a coffee or not. That's not what you want when you're 70 years old 100%. And you're finishing up work. And look, when we're on the topic of women and superannuation is another really, really big thing, and it's probably a story for another day. But a lot of females do take time out of the workforce to give birth and have babies, and we do. So we miss out on sometimes years of superannuation, and superannuation is so important. And I think a lot of young families that I see, we talk about superannuation when we're talking about home loans and future and exit strategies. How are you going to repay the home loan, particularly if you're in your 40s? Do you still want to be repaying your home loan over a 30-year term when you're 70. So we talk about that, and generally females' superannuation is behind where males are because they have taken time out of the workforce. Whether we like it or not, it's quite traditional, and that's what's happened. So just understanding how we can potentially accelerate our superannuation. It's a very tax effective environment as well if you get it right. So understanding where we can channel our money to create the financial future that we want. Yeah. So, and look, I think as a finance broker, that's one of the things we really pride ourselves on at Coast Finance is having a deep relationship with our clients, understanding, taking the time to meet with them and to understand what they need and understand where they are and articulate for them how to achieve that and providing solutions. And I think providing financial and lending advice, it's not about making the decision for our client, it's about providing alternatives, and it's about dissecting the financial information that they give us, working with them so they understand it as well, and saying, these are your alternatives, and presenting the alternatives to them so they can make an educated decision. Yes. We make recommendations, but it's up to the client to make their decision.
Yeah, I think it's so healthy and so important for people to be making informed decisions, and you guys providing that solution. Like, I think a lot of people, and you would have experienced this if, working in banks, I'm sure earlier on there was areas of the bank where it might have been male dominated. I worked in shipping containers, as you know, that's how we met.
That's right.
Male dominated industry, right? And you would have questions, or there would be stepping stones that you had to climb over essentially in order to get the information to make informed decisions. And, I love that you give all the answers, like you give options. There's options for when you have a conversation with you. You share what's available and what's accessible to you with what you've got right now.
Yep, and seeing a mortgage broker or a finance broker, and a good one, is about actually like meeting with them and going through those alternatives so that the client can make the decision. We can make the recommendations and we will guide them as to what we think might be the right decision, because quite often we get asked that very regularly in our business, what would you do? And I'm happy to provide personal advice and insight as far as that's concerned, but it's about empowering our clients to make the decision for themselves and understanding the decision that they've made. And it's very it's rewarding for us to be able to provide the tools and the information and the recommendations to allow our clients to be able to do that. There's nothing more satisfying than, and even if it was a development, for example, if you're a client starting out doing a development, as an example, and even if it's just a small development, where would you go? You don't know. You don't know whether to go to lender A or lender B or lender C. What policies have they got? What niches have they got? You don't know where to start. And I guess coming to see a finance broker allows you to, call on that expertise from the beginning, but have all the solutions in front of you. Do you want to pay a couple of % more but not have a quantity surveyor, or do you want to pay less and have stricter terms from a top tier bank? So it's about tabling those solutions for the clients, helping them work through it, helping them understand it so that they can make the right decision for the outcome that they want.
Yeah, love that. I really, really do, and that's really insightful. Off topic slightly, but also relative, when you were talking about financial freedom earlier, I can draw on when I was younger and everyone was doing the whole Kentucky tours and things overseas, and I had absolutely no interest. I've never had an interest in fucking camping in my life. I never will.
Yeah.
But in my head, I was like, why would I go and suffer through the poverty phase of my life where I've got no money, right? And I'm going traveling. Why wouldn't I wait until I'm retired and I've got my super and I can go play? So in my head, I've always had this, and I love that this is what I'm going to take away from this conversation. It's like put some focus into the super part of life, because I haven't been, and it's kind of been like in the back of my mind as something to focus on, but I haven't done it. So this is great. I'm going to go take action on that. But like, I want financial freedom when I'm retired. I don't want to work for it. Like, my mum is one of the hardest workers in the room, and she is still working full time. She lost all of their life savings to a property developer a little while ago.
So dangerous.
Maybe 7 years or so ago.
And heartbreaking.
And they were set, and then they had to go through solicitor fees and things, and then they pretty much lost everything and had to start again as, almost in their 60s. And that was, I never want that for anyone, let alone myself, but or my mum, for goodness sake. So I'm seeing what they're going through at the ages that they're at, and it's something that, I'm just like, fuck, what would happen if that did happen? Like, what's available to me? What am I not currently focusing on? Where am I not putting some time into, some money into, some focus into in my life right now? Because that can happen. Look, I would hope that it wouldn't, but it can.
That's right. Absolutely. Absolutely. And that story is not uncommon, unfortunately. One bad investment decision or one bad financial decision can lead to an absolute array of subsequent events that just unfortunately leads people into a position that you said your mother's in. And look, I'm not saying that we are or financial planners or mortgage brokers, finance brokers are going to provide the perfect advice, but if you don't get that advice, you're not going to know. So, and do with it what you will with the advice that you get, and piece it together and get some advisors that you can trust. Accountants, solicitors, financial advisors, finance brokers, and take the advice, because it is what we do every day. And this is where we are every day. We're working in this environment every day. We're tabling this advice every day whilst you go out and do what you do best. So I always say, take good advice. Good advice costs money. Yes, it does, but it's an investment.
It saves you in the long run.
Absolutely.
Right?
Absolutely. Surround yourself by good advisors. Yeah. And I'm not saying bad things don't happen, but that you're giving yourself the best start and the best protection that you can by surrounding yourself with good advisors. And I think that that's in any facet of life, whether it be financially or otherwise. Yeah. So, but look, there is no reason why you can't start again when it comes to a home or an investment property, or when it's later in life. But we do look at alternative strategies when it comes to exit. So if you're not going to be able to repay the loan over 30 years because you're going to be retired, for example, we look at how much money have you got in your super, when you can access your superannuation, can you repay that loan in full? Or have you got other properties that you can sell to repay the debt? Or in a lot of people's cases these days, downsizing is an option. We seem to be living in these very big homes, accommodating all of our family, but we probably want to live in a more modest home when we're in our 70s and 80s and travelling and not having so many stairs and so on. So downsizing is an option as well. So don't be fearful at a younger stage in life that you're never going to be able to pay off the loan in full, because there are alternatives to repaying debt as opposed to just salaries and wages and self-employed income. There are other things that you can do to extinguish debt, and other opportunities. So, and look, everybody's situation is unique and different, and I think it's really good homework to have a think about where you are and consider talking to somebody about what opportunities do I have for financial growth.
Yeah, that's awesome. Thank you so much. I feel like that's just that there is so much value to take in. I would love to know, today's economy, obviously a lot of people are feeling uncertain about their financial future. You've touched on a few different things, but some practical steps they can take to regain control and feel more secure. Just some small things that you think, like micro doses of things that they can do in their everyday life that might help people feel more secure in their finances.
Yeah, look, I think understanding where and we come back to banking, everything's electronic these days. Yep. We're not in a cash society. So I think understanding where your inputs are and understanding where your outputs are, and I think that's what it comes down to. Yep. The simple mechanism of, okay, and we're back to that B word, the budget, and but it's about understanding where you derive your income sources from, and what does that equate to, and what does that equate to after tax too? What's your after tax position? A lot of people come to me and they say, oh, I might earn, $80,000 a year gross, but what does that articulate down to on a fortnightly basis net into your account, and what commitments do you have and what obligations do you have, and what effect is a car loan, for example, going to have on you being able to afford your housing loan? And so it's really about understanding the basic inputs and the basic outputs. That is honestly the best advice that I can give anyone as to where to start. So it's just the basic mechanism of it.
Yeah, and I think so many of us are living beyond our means. Like there was a guy on the radio that I saw, like a TikTok or a reel or something on Instagram, and he was saying that he'd spent $40K on Uber Eats because the CommBank shows how much you spend on certain things, because it comes up now in your statements.
The metrics.
And I was just like, I don't want to know how much my family does take away. Like we live in a very convenient household because there are so many of us, right? And you can relate to that, where it's like, I don't want to think about dinner tonight when my brain is so loaded with so many other decisions and what everyone else wants. I just want to order it and it be done. But that builds and builds and builds, right?
And it's easy to get out of control when, as I was saying, you're not physically carrying cash these days or handing over a $50 note. It is so easy to swipe your card and to live beyond your means.
Well, it's on your phone now.
That's
too.
right.
I don't even take my
100%
wallet.
on your watch. The other thing that brings me to is talking about credit card debt.
Yes.
Credit cards. If there's one piece of advice I can give is please, please, please do not overspend on your credit cards. Credit card debt so easily gets out of control, and it is one of the biggest impediments to getting a mortgage is a high credit card or an escalating credit card debt. Because what lenders look at with credit card debt, people say, I've got a $15,000 credit card, but I usually only, spend $1,000 a month on it or $2,000 a month. The lender will look at that credit card as if you're using it full capacity.
Okay.
Because the minute you've got the loan, you can go out and take that up to $15,000 if you want. And obviously with a credit card interest rate being, 18, 19, 20, 21 and more percent, then that's a really big financial commitment, and it will cost you a fortune. And and lenders look at credit card debt not poorly, but if you've got a high credit card limit, it will really affect your borrowing capacity. So, keep
No credit cards.
by all means have a credit card. Keep the tabs on it and try and have a low limit, particularly if you're looking to maximise your borrowing capacity.
Yeah, when I was a lot younger, it was kind of the family mantra of not to have a credit card, and I went and bought, I think it was at the time, a brand new car. I was only 18, but I bought a brand new car. In my head, it was a great decision. I remember my pop sitting me down, and he was an accountant, so he sat me down and he's like, made me cry. You made the worst financial decision of your life. Your life is over. You'll never pay this back. You'll never succeed in anything.
Oh my
It was this whole thing. God bless his soul. Like, he actually was trying to be nice and help me understand, but he didn't. He put I didn't have the awareness, right? And then I also had a credit card debt at that time as well. It's so small. It's like $500. So
Yeah, that's right. But at the time.
But at the time, it was a huge deal, right? So then, I went against what my family had said, got one, and then I paid it off, and I've never looked back. We'll never have one again. It's just like, no, not necessary.
Yeah.
And I'm going to be telling my kids the same.
Yeah.
What would you say for any young adults as a key takeaway, like 18, 19-year-olds that may or may not hear this episode? Because I do have a young audience that listen to the podcast as well. They might not be in the position of buying a home, but they might be saving up for that new car or whatever it is. What would you encourage them?
Yeah, look, I think keep a tab on what your debts are and try not to have a variety of debts and a multitude of debts. So things like car loans, credit cards, help debt is a really big one. Obviously, so help debt is your university debt, your old HECS debt.
Yes, right.
So look, during COVID, the ATO, Australian Taxation Office, lowered the interest rates on help debt. It's still lower now. The indexation rate, I think, is, I'm not even going to pretend that I know what it is. I looked it up the other day, but I've forgotten, so don't quote me. But obviously, help debt or university debt is a necessary evil. How else are you going to pay to go to uni? That's how you get your education, and you only start paying your help debt when you reach a certain income threshold. Yeah. So you don't have to pay it if you end up being on a low salary, but once you start to get into your higher salary brackets, you start having to accelerate paying your help debt back. So I'm not saying that's bad debt, it's good debt, because obviously you've got the education and it enables you to have a career and enables you to have that education, which is so powerful and so important. But try and minimise if you've got a help debt in particular, try and minimise your other debt. Credit cards, car loans. Car loans are okay. Again, save up for a car, try and get as much cash as you can together to put towards it, but keep the repayments consistent. And if you've got the ability, make extra repayments. Yeah. So get the car that you want. Again, living within your means, but try and accelerate the repayments so that you've made an active effort to get rid of that car loan or to pay down that car loan before you start thinking about housing loans and so on. So try and keep your debts to a minimum. Look, when we're doing housing loans for clients, we can consolidate debts, and that is one thing that we do that's very common, and we may pay off all those debts. So you've got one easy to manage home loan or investment loan over a 30-year term, and your repayments are a little bit more rounded. Generally, car loans are a little bit more expensive on interest rate, and the repayments are usually a little bit more hefty per month because they're over a shorter term. They're generally over a 5 to 7 year term, whereas if you put all that debt onto a home loan, you're looking at a 30-year term, so your repayments are smoothed a little bit more. So, look, the best advice I can give to anyone looking to get a home loan, investment home loan or otherwise, is try and minimise external debts.
That's great. That's very, very helpful.
Keep them under control.
Yeah.
And no buy now, pay later. Yep. Zip Pay, Afterpay.
Yeah, all of that.
Those lenders aren't going to like me for saying that, but Zip Pay, Afterpay, it's just so risky. Buy now, pay later is one of the biggest things that have hit the industry in the last 3 years, and we just see that the debt and buy now, pay later escalating, and it really can be difficult to manage if you get carried away. So it's so easy to just go to the checkout. Yep. Shop pay, buy now, pay later, and again, it's like the mindless spending on credit cards. It's just
absolutely, and like the society that we're living in now too. Like the younger generation, they spend so much more money because they're into so many more different things. Like, i.e., my now 13, she turned 13 today, Lexi. But Lexi and Raquel, my stepdaughters, they spend that amount of money at fucking Mecca. Like they come here and get their eyebrows done. They're 13 and 15. Like, do you know how much that
That's
costs?
right.
Do you know what I mean? They've got these appointments and they've got these services they need and they've got these products that they need in their skincare routine. And I'm like,
and it has to be Mecca or it has to be Sephora.
I washed my face with a hot washer until I was 20. What do you mean?
That's right. I know. And it's also accessible as well. It's,
totally.
And social media as well is definitely a key influencer as far as that's concerned. I think I'm kind of glad I've got boys. I don't know whether that's going to be cheaper for me. It appears to be at this point. But yeah, look, and just so dangerous to buy now, pay later. So girls, if we're thinking about finance in the future and we want to be financially secure longer term, try and stay away from it. Go and earn your money and pay cash for what you want to buy. Live within reason, but think about the future as well.
That's amazing. Well, Nat, thank you so much for coming on the podcast show today. I'm so grateful that you've been here and sharing all of your wisdom with everyone. I feel like there's so much in this episode for women to feel empowered by and for just to take into their everyday life as well. I think that's so important. So thank you for coming on.
Thank you for having me. I really enjoyed it, and I look forward to the International Women's Day function.
I know. I can't wait. I'm so excited. We're going to have the best day.
I'm super excited as well.
Sometimes I lay in bed and I just look up at the roof and I'm just like, oh my God, it's happening. Okay, I'm doing it. This is so exciting.
And particularly after this much work. You've done so much work towards it. So it's going to be an event to remember.
Oh, it really
and
is.
with obviously our primary goal of raising money for Jenny's Place.
Absolutely. And bringing, the community together and just bringing awareness to Jenny's Place and everything they've done. I spoke on my Welcome Back episode. If you didn't listen to that episode, go back and have a listen. It's the first episode of this year. I spoke to the event and the fact that it was sold out in 23 hours and the, incredible journey that I've had with bringing the sponsors on board like Nat and the team. And just how much has gone into the event. But the fact that we're walking out of this knowing that we have raised over 70K, which the final number's not there yet, but this amount of money for this charity is insane, and I just know that it's going to make true impact. Like, the goal was make impact, not just touch the sides. I wanted to fucking change lives.
Yep.
And I just feel like there's so many kids and women that are going to feel that.
And look, we've already raised over $70,000 and we're just getting started.
I know.
So we've still got the event to go. So I know that we're going to make a difference and make a change. And you've done so much hard work, and I'm so proud of you.
Oh, thank you. Well, thank you for your
Thanks
support.
for having me, and thank you for everyone for listening to finance. Like I said, less than sexy, but it's really important. And I think we should probably touch base regularly and provide updates.
Would love to. For anyone who has listened who would like to get in touch with you and the team, where do they find you?
Yes, we're Coast Finance Group. We're at Broadmeadow in Newcastle, New South Wales. I've got Instagram. I think we'll link in on the Instagram.
Yeah, everything will be in the show notes of this episode so that you can just click away, find Nat and the team, and you can get in touch with them.
Yep, B for budget.
Yeah.
Sounds good. Thanks, Chris.
Thanks, Nat. Thanks for tuning in to today's episode. If this landed for you, I would love if you can share this conversation to your socials, and don't forget to tag at Inside Out with Chris. Don't also forget to hit subscribe or follow so you don't miss next week's conversation. Bye.